Please be advised of the disclaimers. Hey, welcome back to my channel. It's Pinnacle Trading here. So I've been getting a lot of questions about the stock market. Has it bottomed? Is there another chance to get in? Or, did you already miss the drop and is it already up? And did you miss the drop that we had with the correction? So again, welcome to the channel. If you're new, make sure to hit that subscribe button. If you're coming back, welcome back to the channel. So let's jump into it. I'll go into it a little bit in depth, but I'll try to keep it as simple as possible. Give you key level support and resistance that I'm looking at. Support is an area that we have a bottom or a base at where things bounce off of, and resistance is an area that something is trying to break above. So this is S&P 500 right now. SPY is about 276, closed even today. So let's look at the overall chart and then get an overall view. So ignore all these right now and just look at the simple chart. Maybe I'll even try to get rid of all of these, and then we'll just look at the simple chart. We'll also take out these patterns. So we have lows. Lows is already when it started, which is about a 0, and then it opened up whenever the markets first open, and we have highs, all-time highs at 339.08 right now. So recent months we saw a drop all the way down to 220, I believe 218 lows, and then we saw a nice run up again. So that's the run up we saw. So it fell from 339.08, about 25-30% correction, and we saw this come down to 220 area, now back to 280. So did you miss it? Is it going to keep going up or will it come back down? So simple answer is it really depends on the news. So whether the virus stuff gets better and things reopen and the economy gets better. But personally, I think we'll see another drop, maybe not to lows. Maybe it could even break lows, but I don't think we will break that 220 or the 200 area, and I'll show you why in just a second. So let's put those back on. This is my script. So back in about 2008, we go back. So right here, about 08, so we saw a drop from about 150, let's just call it 155, all the way down to 70. So about more than a 50% drop in 2008. So that was the economy, and that was very bad back then. We had a tremendous drop from there about 1 to 2 years, and then look at what happened after. It recovered, pulled back a little bit, and it kept going up. So is that what we're going to see next? And that's what I believe we will see again. So we're seeing this run up, but again, I think it can fall before going up. So let's look at the Fibonacci levels on this one. So let's look at the yearly, and let's look at why that doesn't give us the best direction and why it can drop more, but also not too much below this 220 low. So right now, anytime something drops where we see a correction is usually below the 78.6% between that area and below the 50% area, we are in a dead correction. So anytime it breaks below that 38.2, 23.6, that's where we see a market crash. Usually about 50%, 40 to 50% is usually a market crash. So when we look at the 20-year chart, we can see that right now we're only at that 50, not even that 50%, the 38.2%. It bounced really low, just off right below it, and then it came back up again. So being that, we haven't even hit 50%, so that's why I believe we can definitely see the 61.8 retracement to 50%. So anywhere between that 170 to that 200 will be that lows, but I don't see it holding with the candle like this. Again, what that means is I think it can just flush below 200 really quick, like a day, maybe even a couple of days, but bounce back really fast. So when you see that, that's what we saw here as well. When we look at, let's pull up the 3-year chart, and that's what we saw here. We saw the drop in 2018 December, but look at how fast this recovered. So I think it can just drop for a couple of days and maybe max a week and then bounce back really fast. So that's what I believe we will see next. Again, it's really important to watch this 280 resistance. Anytime it's breaking over, it's getting rejected. So it's trying again. It tried today. It couldn't break over. It sold off. So for now, I think within the next couple months in the summer, I think we'll see a drop to about 240s again, the 245 area. But if things get worse, the virus spreads even more, people don't recover, more deaths, whatever it is in the news, if things get worse, I think we can definitely see a drop all the way down to these lows, about 220 area, maybe even test up 200. But for now, based on my analysis, I think we can see a drop to about 240 to 250 and then bounce up from there and then head back to 300 area, and then we'll see where it goes later on. So it's really tough to say right now. We'll have to wait till about May or June, see how things play out, and then go from there. So that is my analysis on the market. Again, when you're looking at just a normal 1-year chart, we see a nice MACD reversal, RSI reversal, so 50 area. So if you're buying for long term, it's good to just dollar cost average. So when you see these big drops, let's say you have $10,000, right? We want to set aside like $1,000 for every week. So every time you see this drop, every time you see it break like 5 points, put in 1,000, and then every time you see it break 5-10 points, put in another 1,000. That way you get the best average possible. It's really hard to time the bottom, catch the bottom itself. Nobody really knows how low it can go. It could even go to 0. We don't even know. So it's best to dollar cost average. So that's my quick analysis. So put it all together to summarize it. I think we can see it pull back to about 240, 250 again within the next couple months, and then it bounce over to 300. Or if things get worse, I think we can test at 220, but I don't see it going much lower than 200, and I don't see it breaking 200 and holding for a while either. So that's my quick analysis in the markets. And if you want to learn, or if you want to catch what trades I pick out for long term, we have a long-term investing alerts tab in the chat room, and the chat room is free to join. You can join using the link in the description below, or in pinnacletrading.us. If you scroll down, you can click that button and join for free. If you're interested in learning how I do this analysis and how I use these scripts, like how I set up these charts and how I look at this Fibonacci levels, if you want to learn all that, I do have a course for that, and it's for trading, investing, and also financial money management as well. So if you're interested in that, send me a message in the chat room for $100 off discount, and I'll get you that. So again, if you're new to the channel or if you're just coming back, make sure to hit that subscribe button and the bell button next to it. And also make sure to share the video as well so that people can stay updated with the market.